Hello everyone, Charting Man Dan here. So going to do a review on the video review that Orion did on EMH a bit earlier. And certainly looking forward to Thursday. They're going to be doing, Orion and Jordan, they're going to be doing a basic Intro to TA webinar at 8 p.m. Eastern, and they're going to be interacting with people and answering some questions. They've also got their little game plan drawn out of what they're going to be talking about. So certainly looking forward to that, really liking how they're putting themselves out there and documenting their process in terms of learning technical analysis and pretty much doing it on video and in front of everybody. And certainly useful to see where mistakes are made, where improvements are made, their steps in terms of what they're learning. And in the video, Orion talked a bit more about their inside bars and getting a grasp of that. And I'm currently working on some educational videos on inside bars myself, as we are utilizing this strategy a lot more. And we also have an alert system built off of it. So certainly lots to do going forward. And that's what I love about this sector, just stock trading in general, where there is always progress to be made, and it's ever changing and ever evolving, and opportunities are everywhere. Lots of fun. So let's get into EMH here on the daily time frame. So what stands out to me is the volume, and we can see the volume on the pullback has been steadily declining, lower and lower. And what that tells me is the bears are tiring. That's a good sign for the bulls, the lower the volume that we do get. Now, what would change that would be a spike in bear volume. If a spike in bear volume were to occur, that would change the short term, and we'd be looking for continuation for the bears to the downside. Orion kept talking about the 118 level, and that does stand out to me as well. That's the lowest price that we have hit, 118. If that level breaks, we're seeing another leg to the downside. So we're watching this on all individual names on the sector. They have their low back in the last week of April, and they're currently hovering just above that low. Some of them are closer to that support than others. Some of them have more wiggle room, and EMH doesn't have a lot of wiggle room where we currently stand. But the whole sector is just watching this low of the consolidation so far and seeing whether we can form a higher low and try and shift things and turn it around to see a higher high, or if we're going to see the lower lows continue. So it's an important week coming up in terms of the downtrend on the daily time frame, and 118 is that level for EMH. If we break 118, the next level that I would be looking to test here would be 113, and there's a gap here, or there's not a gap, I should say. 113 and 112, that was the high of the day and then the low of the day, so that's where I would be looking if 118 broke. But obviously if 118 breaks, we don't want anything to do with a bullish position at that point. So personally, if looking for a bullish entry, this is a bit of a bullish reversal candlestick, not convincing. We do have a lower wick off of 119. We have to see a break of 134 in order for the bulls to be confident that the short-term lower high, lower low downtrend, short-term referring to the past 3 or 4 weeks, to be confident that that has broken back to favoring the bulls. And it's going to take a spike in bull volume accompanying that in order for that to happen. So I would need to see a more significant bullish reversal candlestick. I would need to see 125 and 126 break on Monday or Tuesday in order to be confident that the bulls are going to be making another attempt at the low 130s. Orion also pointed out how in the downtrend, there are opportunities of short-term bounces for little day trades. And one thing that I noticed on that was that every single dip and that saw that bounce opportunity for a quick day trade had an RSI at or below 30. That RSI is very important on the 5-minute time frame. I cannot tell you how often we use that with big board stocks, with CMG, Apple, Facebook, all these big names. When their 5-minute RSI gets oversold, we scout for support levels on the daily, the hourly, and those time frames, and we look for the bulls to defend those levels. I love nothing more than to see a 5-minute RSI down in the low 20s and approaching a critical daily support. The odds of the bulls bouncing off of that level are very significant, and we see it time and time again. So on the 5-minute time frame, an oversold RSI under 30 is something to be looking out for. So in terms of the weekly time frame, can't get much more clear with that volume. Very clearly, we are seeing volume shrink, and we're seeing that tells me the bears are running out of steam. Just like if we were heading to the upside and seeing a bull move and seeing declining bull volume, that would tell me the bulls are running out of steam. Same thing to the downside. So what we have now here is I'm looking down at this 103 support. That's a double low, and the fact that we got our higher high by breaking the high of November of 190, that is significant because it keeps the bulls in control of the overall trend. So we have a double low and a higher high, so we are looking for a higher low to form compared to 103. And if we are looking for a longer term entry, if you're not looking for just a short term swing trade of a couple days, you could be using that level. Personally, I would likely use $1 psychological. You could use 101 if you wanted to give a little bit of wiggle room under 103, but I would be using about 99 cents if I were looking for a long-term entry, trying to play off this support and look for the bulls to show back up. And again, it's the volume that would be increasing my confidence that that support was going to hold at 103. So we have an inside bar here on the weekly time frame, and you can see how an inside bar on the weekly is just a macro dumbed down version. Don't want to say, you know, you're dumb if you use inside bars, but it makes it more simple. It shows us that 134 level, whereas here on the daily time frame, you sort of have to pick it out. Okay, where did we see a bounce attempt and a rejection? So I did pick out that 134 level because it visually it stands out very clearly to me, but for someone that it might not, this inside bar tells us exactly the levels to be watching, 119 and 134. Now we know 118 is the low of the previous week, so I would just use that. If it's within a penny, I would certainly use the lower of the two as the key must-hold support, and that's what we're watching into this coming week. So maybe not a bullish signal, maybe not a trade signal entry on Monday, but we know what we're looking for. We're looking for 118 to hold, and we're looking for a more significant indication that the bulls are showing up in the short term. And that key 118 support, if it does break, then we can even be looking at a bottom fishing play, which is a play off of a key support off of the 103. That's what I would be watching after that. So certainly agree with pretty much everything that Orion said. A little bit more indication, or I should say a little bit more emphasis on the volume and the RSI for me, just in terms of the 5-minute dumps for a bounce and the daily and the weekly time frame volume telling us that the bears are running out of steam. Look at the bull volume on the way up. Big bull volume, and then the bear volume is declining on the way to the downside. So I do anticipate a higher low to form, and if the entire sector were to dump, that would obviously change that, and we would likely see EMH dump with it. But we're going to be watching very close, and we'll certainly keep checking back in. I appreciate everybody watching. I appreciate Orion and Jordan with all of the work that they're putting into this for the community, and we'll see you soon.